Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm so glad you could join me for today's video, where I'm going to be talking about, the chop in the market. I get a lot of comments saying, "Hey Mike, can you make a video about, how to identify chop in the order flow and how to deal with it?" But before we jump in, if you've been enjoying my videos, be sure to hit the subscribe button and click the notification bell so you don't miss any new upload. And if you find today's video helpful, be sure to hit the like button for me and leave a comment sharing your biggest takeaway. I love hearing your feedback, and sometimes from your comments I get ideas to make videos to show you. So your support really does go a long way in helping me create more awesome content just like this. So if you're getting value from my channel and want to see more, be sure to hit the like button, subscribe to the channel, and leave a comment. All right, so let's go ahead and get started with today's topic. All right, and chop is one of those things where a lot of traders sort of get into trouble, so to speak. On a trending market, it's one of those things where, even if you're a little bit late, you can still make some decent profits. But when you run into an area of chop, the problem is you're going to get chopped up, hence the term chop. And traders they're trying to sort of look for some breakouts to take place. They're not really occurring. They're finding themselves getting caught off sides. It's one of those situations where they're buying the high and selling the low, right? You want to be buying the low and selling the high, ideally, but in choppy situations, right, like this area right down in here, it's hard. Market lacks direction. But again, on a nice trending market like this, where this was yesterday, Friday, even if you're a little bit late getting into a trade, you could still make some decent profits. But this, you're waiting for a breakout that never comes. So let's take a look at the order flow and sort of talk about, what you can look for to identify chop taking place in the market. Now, this isn't order flow related, what this part I'm going to talk about. When your market is sort of, I don't like to use the term chop, but I prefer to use the term sideways activity, is you got to remember, right? If a market has just made a big move, and again, we're selling off from the 45.60 area, 45, 57, all the way down to 45, down to new lows, and it bounces a little bit. I mean, you can see every time we sort of hit a low, we're struggling to go higher. Right here, we got a bit of sideways activity. Here, this was much more pronounced, but understanding where areas of sideways activity can take place is going to give you a little, in my opinion, a bit of a leg up in identifying when chop is taking place. And anytime, whether we have a big move up or a big move down, and then the market stops and just looks like maybe it wants to start to rally and it's not really doing it, that could be an area of sideways activity. Okay, until something gives you another sign that, hey, we got another leg in this move and it continues down, or maybe a lot of buyers are coming in and the market's going to rally up. So let's take a look at the order flow and sort of go through some of the signs that I would look for in identifying a market that's got sideways activity. Some people will call it chop. I just prefer to call a market going sideways. And again, this is, the market is selling off quite nicely, quite strongly. This was Friday, right? It's selling off new lows, this red line, new lows, new lows, new lows. We hit this low here at 10:03. Now, this wasn't the low of the day yet. And then we proceed to get a little bit of a bounce, okay? And it comes off the low at 7 3/4, rallies up to around, the 14 and a half area, okay? Now, was there any big, strong buying taking place in here? Well, that there was some nice positive delta coming in, so there was some aggressive buying taking place. Then we get up to this bar right up here, okay? And this is when I talk about identifying, sort of chop, because again, remember, the market had just sold off from, it was almost a 50-point move at this point by 10 o'clock. And what do you think is going to take place? Are people going to take profits eventually? Of course they are, okay? So this is, every time I get a little bit of a bounce off of a low on a market that's been moving in one direction, I'm kind of thinking, hey, is this profit taking? I mean, why are we stopping here? Or if it's just profit taking, chances are we're going to go sideways, right? Because people are just taking money off the table. They're putting it in their pocket. It's not fresh buying or selling that's coming in yet, right? If it's profit taking. And, sort of what some of the clues is, the volume, it's kind of pathetic, right? You're just looking here, the bar off the low, 4,000, 3,000. Again, coming into the low is 6,000, 5,000, 7,000. You see 4,000, 3,000, 4,000, 3,000, 3,000, 2,000, 2,000, 2597, 2,300. So you have this move. It's strong selling going down, but we hit the low and we start bouncing up a little bit. Do I think that that's fresh buying coming in to sort of say, hey, you know what, Mike, this is the low of the day? No, we got less volume after we've made that new low. So I don't see like that fresh buying coming in the sense of people that were on the sidelines thinking, hey, you know what, it's pretty cheap at this level, 45, 08, 09, 10. It's just not there. So that to me is a sign of, okay, maybe this market is experience a bounce, and if it's experienced a bounce, potentially it could go sideways, okay? Because I'm not looking for it to rally. Again, it's that low, it's going to do three things. It's going to rally, or it's going to go sideways, or it's going to sell off again. And that weak volume that's taking place in here is just telling me, it's probably going to go sideways. And then I start seeing, some bearish signs in the order flow, right? The bearish point of control coming in here. This is a slingshot point of control, which is a bearish sign, followed by a bullish prominent point of control here. Okay, so they're quite close. This is at 13 3/4. This is at 10, so about just under 4 points, which to me, now I'm seeing the market kind of getting bracketed. This is my resistance area right here. This is my support area right here. What else do I got? I've got another point of control. These are aligned point of controls. One follows the other. And you got one that sort of marks over here as well, a few bars earlier. And then internally, I'm looking at these bars. Okay, yeah, I like that I'm seeing point of controls go lower, right? This is lower than this one. This is lower than the previous one. This is lower than the previous one. Okay, then it jumps up, back down, back up, back down, consecutive aligned point of controls, another aligned point of controls with that bullish. Okay, then we rally up. Where? To here, 13. So I'm already seeing the sign in here of the sideways activity. This was my first sign, and I wanted to see if there was going to be some support coming in here. And you're seeing it with the point of controls, right? With the two consecutive point of controls at the same price level. That sort of lines up earlier. In the middle, you've got 1, 2, 3, 4. Even here, 1, 2, 3. Okay, so out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars, you got 4 at 11. You got 3 at 11 3/4. So it's telling you just right in here, it's forming, it's kind of balancing basically. Okay, then you got another 2 coming in right here, right? Anytime I start seeing point of controls being lined up, now you don't have to wait till way over here. This is my clue that, hey, you know what? If we're going to sell off, I got my bearish sign here, right? This is the low down here. I want to see it. But it's just starting to go bounce back and forth, right? You're seeing the point of controls 1, 2, 3, 1, 2, 3. Then you got that bullish one. So I'm looking for this market to sort of go back and forth. Now it does pop back up. Again, it comes back up to this resistance level. 2 more point of controls at that level. Goes back up. Then it comes right back in here. Okay. Again, is this a sign of a potential breakout? Right? Because we just sort of took out this little swing high here earlier. Well, okay, let's see. Maybe, maybe not. The order flow is kind of bullish, right? 3 imbalances, nice bullish delta, then a nothing delta, nice strong delta. Then it comes right back with selling. Strong buying, strong selling, more strong selling, and then you're back where you started. Okay. And again, every time it looks like it's about to break out, you're not getting that sort of strong buying coming in. I mean, you get the one bar with nice positive delta, then a bar with small delta, then another bar with nice positive delta. What you want to see is sort of that continued positive delta, right? 492 and then just 39. If this was 390, I'd be more excited about it. Just like back here, strong delta, small delta, strong delta, then negative delta, strong delta, strong negative delta, right? It's not being consistent. Okay, then it just sort of bounce around, just sort of going sideways. Now we sort of found this newer level a bit higher, right? From, you could even take it from this high, but really you're going to be looking right around here. And again, you're seeing all the point controls more or less right back in that same level. Now these are a bit more scattered, okay, but you're seeing it start to line up 1, 2. Anytime I see basically 2 point controls at the same price level consecutively, it could either be a sign of a market that is consolidating, going sideways, or a market that's just balancing basically. And then you see 1, 2 here. These you got with 3 going down, right, from lower, 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 then up, 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 but they're around the same level here and here, right? And then you get in here, even though these are kind of mixed here, you could sort of average these together just visually looking at it, and almost draw that line at 16 and a quarter. These would all match up, right? Obviously 1, 2, 3. These two are right around the same level. These two 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 right around the same level. Because why is that important? Is because this is a 1-minute chart, and it's spending time over the same price. I don't say over the same price, but rather it's facilitating a lot of volume, right? Point of control is the most volume in a bar over time. Okay. And you can just see, pair up, pair up, pair up, almost a pair up, almost a pair up. Then it starts dripping down here a little bit lower, 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 lower. But again, it's just one price level lower here and here. Okay. And then, finally when it starts to break out, now you're sort of gapping, right? You're getting more, you're not seeing the pair ups here. At this point, once it sort of gets below this 14 area, stays below there, okay, then it opens the door. Now, it's one thing to look at the point of controls. That makes it, a bit easier, a bit clearer. But what I've found that helps me out a lot, and that's why we've added it into our Orderflows Trader software, is the value areas. Okay, and again, the value area, right? I use 70% value area in percent. The value area is where 70% of the volume of the bar trades. Okay, and I'll just turn it on here. And what I'm looking for at the value areas is overlapping value. Because when a market is trending, right, the value areas tend to be going in a direction. Okay, but when I see value areas basically overlapping, 1, 2, 3, 4, 5, 6, 7, 8 bars overlapping, that is a sign of a market that is basically going sideways. But you got earlier sign right here. This one, 1, 2, 3, 4, 5, 6 bars already overlapping here. Okay, then a little gap up, so a little higher. The value area is higher than 1, 2, 3, 4. Then 8, another 3, another 3. Looks like it's going to go up. Well, you got this gap up here. It doesn't build off it. Gap back down. Then 1, 2, 3, 4 overlapping. 1, 2, 3 overlapping. Basically I like to look at periods of 3 or more. 1, 2, 3, 4. Again, 1, 2, 3. 1, 2, 3, 4, 5, 6, 7, 6. 1, 2, 3, 4, 5, 6, 7. Okay, so again, you just had that by one tick, and then it just overlaps everything else again, right around the same levels. So, that's why I use value areas, because to me, it's pretty clear when a market is balancing. When I see value areas overlapping, 1, 2, 3, 4, 5, 6. Okay. Now, what I like to see if I'm thinking a market is going to start moving is some gaps in the value. The bigger, the better. This one is from 15 3/4 up to 16 3/4. So 4 ticks, almost a point, which is nice. Kind of expecting to move higher. It just came in here. Then it starts coming back down and overlapping. 1, 2, 3, 4, 5, 6 again. Okay. There's a gap in here. one tick gap, then another 1, 2, 3 gap, 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 gap. So once it starts gapping consecutively or, in a series, to me, that's a sign of a market that's potentially starting to move in a direction, right? So you got one gap, two gaps, three gaps, right? This one, value area low of this bar equals the value area high of this bar, right? Then it overlaps, another gap here, another gap here. So, I like to watch those little bits, that movement, right? In value, is value moving higher or moving lower? And how is it doing it? Is it putting some space in between the bars or not? Those are just sort of the little things that I like to look at in determining, hey, is the market going sideways? One of the other things I like to look for on a market that's going sideways is, I'll watch the deltas, right? If I see a big delta, like here, 785, I'm looking for the market to build off of it. Here, you had 662, 523, 539, 662. Okay, hey, you know what? Some strong buying is coming in. Let's build off of it. Then 269. Okay, it's a little bit weaker, but still decent. 437. Okay, that's great. Then minus 161, minus 140. It's not building anymore. Negative, negative, negative. Big positive. Let's go. Delta of 1. And a delta of 295. Okay, maybe it's picking up again. Delta of 57. Delta of 56. Small. Then a negative delta, minus 351. Then, 167. Then strong again. Hey, 456. Hey, you know what? Maybe it's going. And then 147. 155. This is where it looked like maybe it was going to take off. 767 delta. Then just 89. But then 774. Hey, that's great. And then boom. Minus 400. And hey, 600. This is it. Oh, sorry. False start. Minus 300. Minus 592. Right back into our sideways area in here. So again, what I look at is I look at deltas, I look at point of controls, I look at the value areas and determining, if a market is going sideways. All right. So I hope that helps some of you guys. It's one of those things. It takes a bit of experience to understand, honestly, by watching the markets for a while, and just sort of watching how it goes. Watch anytime there's a big move. Right? Markets don't move in a straight line. They move, they stop, and oftentimes they stop and go sideways. Okay, so think about it. Think of it like an elevator, right? You get in an elevator, some other people get in, all right? You're going up to the 32nd floor, but it stops at 18. Some people get in, some people get out. Then it goes to 21. Some people get in, some people get out, right? And the market's the same way. It goes up, it goes down, it stops at certain levels. People get in, people get out. Sort of look for those signs, right? If when the elevator is going to continue. But when you sort of see mixed things in the order flow, that's a sign of a market that's going to be going sideways. So, all right, guys, that wraps up this video on sideways activity. I hope some of you guys at least found these tips helpful. I'm sure people say, "Oh, Mike, you're on crack or something." This doesn't make sense, but honestly, when you start to look at the market, it's one thing to look here, on a Saturday afternoon, Saturday evening, and go through it, but you got to process it in real time. And that's why I make these videos. So people say, "Why don't you show live trading?" Well, I'm showing, you go to school, right? You learn, you go to medical school early on, you don't dissect real live people. And it's the same thing. I'm giving you the ideas that you got to take, and when you're watching the market, look for these things. All right. So if you've enjoyed this video, be sure to hit that like button, subscribe to my channel so you don't miss any of my upcoming videos. And again, be sure to leave some comments down there. Let me know what you think. Thanks for watching and being a part of my order flow community. I'll see you guys on the next video. Bye-bye.